Hi, everyone. Welcome to the webinar. We're going to give it a few more minutes to let more people join, and then we will get started. So just a couple more minutes. Okay, I think we'll go ahead and make a start. So thanks everyone for joining our webinar today. Hey Tim, can you see my my slides?
Yes.
Okay.
I see.
There we go. Okay.
Yeah.
Okay, we're good now. Thanks. This is really taking its time today. Cool. So thanks everyone. As I said, thanks for joining our webinar today. Tim and I are going to be talking about how to choose the right cyber risk quantification solution. Let's see if the slides are going to work. There we go. Awesome. So Tim, let's start with you.
Yeah. Well, and one housekeeping note before we jump too far in: if for whatever reason the screen is showing too small for you, you can always hit full screen and it'll make the presentation bigger for you. So welcome everyone. My name is Tim Wynkoop. I'm a senior solutions architect here at ThreatConnect. I've been in the risk management space for over 17 years now. Been doing risk quant for 9 of those 17. So we're excited to talk about this and give that perspective. And also wanted to let you know, if you hear any weird noises or anything in the background, I'll apologize in advance. I'm currently not at home. I am currently actually in Malawi with my wife for her job. So just wanted to give you a heads up if you hear anything like that.
And I'm Toby Bussa. I run product marketing here at ThreatConnect. I've been doing cybersecurity, everything from security operations to risk management, third-party risk management for over 20 years now. So again, we've put up our LinkedIn invites there. So if you do want to reach out to us after the webinar, please be sure to do that. So today's agenda. We're going to take a few minutes to explain exactly what cyber risk is and some of the challenges associated with that. We're going to talk about what exactly cyber risk quantification is as well. And then we're going to touch on some of the popular use cases and outcomes that cyber risk quantification can empower for organizations. Talk about some of the current approaches and solutions for cyber risk quantification, and then talk about the benefits of a modern CRQ type of solution. A little bit of housekeeping. So there is a chat function. I believe Sarah has already put something in there. So if you do have questions during the webinar, please put them into that chat. We'll be monitoring that. Tim and I will answer those questions at the end. We are going to offer a couple of winners who do provide questions with a chance to receive a $50 gift card. So if you do submit a question, you will be entered to potentially receive one of those gift cards in our prize drawing. But we do encourage questions, as don't hesitate to put those in there as we go along with this session. So again, I think it's important that we kind of start just as level setting, make sure we're all kind of on the same page in terms of some of the terms and terminology that we're going to be talking about today. And that first term is really, what is cyber risk? So Tim, I'll hand it over to you to give us, we've got a couple of examples here, but give us your understanding and how you view what the concept of cyber risk is.
Yeah, absolutely. Thanks, Toby. When it comes to cyber risk in general, I mean, you can see it as we have on the screen, right? There's multiple definitions of what is cyber risk. But in reality, it is really just a way of understanding, like, what's the harm if something happens, right? Especially when it comes from a technology perspective, right? So like as Isaka even defines it, it's like the danger or harm of a loss related to the dependence on technology, right? I think that kind of really hits it right on the head as far as when people think about cyber risk, what does that mean? Right? What does that mean for me as an organization? And that goes into the questions of, well, what do I do about that? Is there anything that I can do about cyber risk?
Yeah, thanks for that, Tim. And so, really, when we think about that, why is cyber risk important? And again, we have a couple of stats here on the screen, but um, and this may sound a bit cliche, but it is the truth, and that really comes down to the fact that as organizations, particularly in the last several years, have had to really accelerate their digital transformation and their usage, kind of becoming digital. They've effectively created a larger attack surface, and you create a bigger attack surface, which could be more potential exposures that create more risk for the organization. And again, there's a number of stats here about this. So Tim, when we look at some of these concepts like ransomware, for example, like how does that really affect cyber risk?
Yeah, well, I was going to say, as you mentioned, right, the more reliance on technology that we have, and technology is great, right? It helps us do things faster, easier, and better. But with that, it also brings more potential harm that could come to your organization. A prime example is even like, I'm sure everybody has heard about ransomware, right? If you haven't, you're probably on the wrong call. But ransomware, right? In 2023, it was increased by to over $1 billion. And just something even more recent that you probably just saw in the news today, it looks like United Healthcare or United Health or I don't want to quote the I don't want to quote the wrong company, but they're going to be up to almost $1.6 billion from their ransomware event that just happened, right? So and that could be for a variety of different factors, right? It could be their controls. It could be that they've reliance on technology, so therefore they have all of these like their attack surface areas going up. And as even some of the data is showing, right, 61% of organizations have experienced a ransomware attack, and with the average cost being around $1.5 million, basically. And that's just from a ransomware. That's not even including a data breach, where even IBM is saying, look, in 2023, the average cost of a data breach was $4.5 million, right? So it's a big deal. And that's why organizations or governments and other groups are providing additional pressure on businesses, whether that be from the new SEC guidance that you just heard for publicly traded companies, or for those in Europe, there's a new regulation that's coming out. It's not out yet, but it's coming out it's called DORA, the Digital Operational Resiliency Act. It has components in there of, are you able to be resilient if there was an event happened? And this is also why organizations like NIST are putting out a more an updated version of their framework of the CSF, right? That did this version 2 just came out.
Yeah, I'm sorry. Go ahead, Tim.
No, you're fine.
No, I was going to say, I think what's interesting and becomes a pain point for organizations is why I refer to as basically these are the bookends, right? This is the stuff that's kind of squeezing organizations because they're getting it from the external perspective where attackers are coming after them, but simultaneously you also have government and industry trade groups, et cetera, also putting a lot more pressure on organizations as well to get better at managing cyber risk.
Mm-hmm.
Tough place to be.
Yeah. Well, then that's even the nice transition. It's like, well, how do you go about measuring it, right? Yep. Organizations have been measuring cyber risk ever since the advent of technology, right? But the challenge it's had is a lot of the time it's been very qualitative in nature, or it's based on feelings, right? And that's fine, and it works for it works, but when it comes to prioritization, right? Here's the challenge: which, if you have two red risks, or whatever red risks is, whatever you're defining that as, which red is more red than the other red, right? It's hard to actually make that decision as far as which one should you actually focus on first. Or even if you're deciding, hey, this is a red, well, what, and you're asked, why is this a red? Well, I don't know, I felt like that, or I didn't, or I chose medium because when in doubt, choose medium, because if it's red, you have to do something about it. And medium, it's, you don't. And green, you can't have too many greens. So
yeah, I as having been a practitioner, on the enterprise side, many years ago, before quantification started to emerge. I mean, this is the way we did it, right? And you're absolutely right. It's kind of like, well, let's have some conversations, and let's kind of almost kind of pseudo survey people and get their inputs and their guidance. And again, it's kind of it felt like, well, this is how I feel, right? I felt like this was a medium, and it wasn't really a high, and you don't know what kind of biases that they're potentially bringing to that when they make those decisions.
Yeah, absolutely.
So we've got a few more challenges here, right? So in terms of measurement, so I think for me, these seem to be not just limited to cyber risk, for example, right? I mean, these seem to be kind of universal challenges that we see in cybersecurity in general, particularly visibility effort, and kind of like, what data do I have access to? How do I do analysis on that? So how do these specifically, kind of, when we get down and say, how do these impact the ability to measure cyber risk? Where are the specifics there?
Yeah, and that's where it gets a little challenging, right? Is there's models out there that kind of maybe help you do some of those things, but it still is the challenge of visibility. Like, how do I know what my risks are? How do I know where to focus my efforts? Right? Or I don't have the resources that we need in which to do this. What do I do? And then where do I get my data from? Right?
Yeah, it feels like, unfortunately, cyber risk management is contending with the same challenges other areas of cybersecurity are as well. So,
yeah, even to the point where I've even had some people tell me, like, you can't do this, right? You can't actually quantify risk. Well, you can, right? It's actually been around for, like I said, for almost 10 years now. So.
Yeah, and so we hear from customers, right, that there's these I almost kind of refer to them as like maybe mental hurdles that they have to get over, right? They've either heard these things from other peers, or they may have experienced it kind of firsthand. But we definitely hear about these these just kind of common misperceptions going back to those things, right? Like, do I have enough data? Do I have enough analysis? What's the it's just too hard to do that. So, right. I mean, I think this is this is a bit of a struggle, for a lot of organizations that want to make that bridge between the qualitative and the quantification approaches.
Mm-hmm. Yep. Yeah. And I mean, just being around for the amount of time that I have, I've noticed these exact same problems, right? Once you get over that hurdle of, well, this isn't possible, then it goes to, well, it's okay, I agree that it's possible, but it's too hard, or I'm not mature enough for this. And then, but that's because the industry has shown, hey, there's ways in which to actually quantify risk. And one of those is a great option, is FAIR, right? But now the market has actually moved a little bit past FAIR as well, right? It's still there, it's still important, but there's that common misconception that, hey, if I want to quantify risk, I can only do FAIR. And that's where some of the other challenges come into play.
Cool. So now that we've talked about, right, okay, there's these misperceptions, or that these kind of mental hurdles that people have to overcome to get to quantifying cyber risk. Let's kind of take another pause and say, well, what do we mean by cyber risk quantification when we're talking about that? Couple of definitions are up there. So Tim, if you don't mind taking us through, kind of through
Yeah.
some of these.
Yeah, and I'm not going to read all of them, right? Because I mean, if you Google what is cyber risk quantification,
Oh, there's
you're going to
pages.
get, you're going to get pages upon pages of what vendors define risk quantification as, or cyber risk quantification, right? At the end of the day, right, it is the ability to define your cyber risk in financial terms, and then ultimately to enable you to make better decisions. That's really the crux of this, right? No matter what definition you go with, at the end of the day, if it's helping you make better decisions, that is what cyber risk quantification is. I know that's very general, but there's a lot of value in what is some of the things that you're seeing here. There's a lot of different words. Simply put, make it a way so you can talk to the business, talk to your stakeholders, and something that everybody will understand, because not everybody understands, oh, I have 50 vulnerabilities and I need to do this and that and this control. And then people are like, what are you talking about? I just need to know how much money I need to give you.
So yeah, there's a couple of common CRQ use cases, Tim. So which of these do you see most often?
Yeah.
Whether the popular ones or the ones you think are more interesting?
Yeah, absolutely. So I think the biggest one that I've seen in just being around for the long time that I have is the ability to understand what your risks are and then ultimately prioritize which control mitigations, right? We have limited budgets, and a lot of the time our budgets are getting smaller, right? So how do you actually use the resources that you have in an effective way so you're actually reducing your risk? So I think that's one of the bigger ones, is that mitigation prioritization. But also I think I've seen more organizations really need to have the desire to, or they have the desire to prioritize vulnerabilities. Like how can we get better vulnerabilities? And then with that as well is getting through your backlog of your business applications or assets that you may have. Is, should we actually retire this end of life application because it's no longer supported, right? Well, a lot of the times I've seen organizations struggle, be like, I've had this for years because I can't get anybody to sign off to get rid of it, even though there's other tools out there that may be better for what we're actually trying to do. And then more recently, obviously, is the SEC piece and being able to say, well, what's material? Well, how do you define what material is if you're not quantifying? So,
yeah. No, I having like I said, been on the enterprise side for a while. I'd agree. Vulnerability prioritization, for example, is a classic case. Like there's only so far you can go with the existing ways to measure, the severity of a vulnerability, and you do ultimately end up at a point where you kind of have to make some tough decisions in terms of there's going to be trade-offs in terms of which vulnerabilities you can mitigate for in some period of time, and then you kind of get stuck because you don't know, like, okay, well, if I always use the kind of example of, if you have if there's capacity for 10 vulnerabilities to be prioritized and remediated this month, and you have 20, how are you going to choose those 10, right? And you don't want to have to go on gut feel, and that's not a good position to be in. So yeah, that's one. And I think in terms of like improving risk communication, right, to your earlier point, I've heard that's a a common challenge, right? How do cyber risk managers, how do CISOs actually communicate upwards to the executives and to the board, and really discuss risk in business terms, right, financial terms? And so it definitely helps there.
yeah, and I think because of those like regulations that are coming down the pipeline, right, CISOs are getting a seat at the table when it comes to the boards and things like that, because they need to be able to answer to, what are we doing for those things? How are we managing this?
Yep, spot on. Cool. Okay, so let's go past the use cases and now actually get into more of the technology, like how do you do this piece. So we've identified that there's kind of three buckets of technical solutions, technical approaches that are typically done. are typically used by enterprises. The DIY kind of in-house, and this ranges everything, from everything in terms of being a custom app versus using spreadsheets, right? Still a lot of spreadsheet use out in cybersecurity operations these days. But then you also have, again, because FAIR has been out there for a while, you've got the apps that are driven by FAIR, and then some of the more modern kind of data and AI powered ones. So what's your insights on this one, Tim?
Yeah, and I think that goes back to, like, how have we been measuring risk in the past, right? Very qualitatively. And then as the switch to even quantification has come into play, people are like, all right, let me see what I can do for myself, right? Which is, they want to use their own data, right? Which is why, okay, let me just build something internally because it's too difficult. Okay, well, and then there's organizations that are using FAIR. And to be clear, I'm a fan of FAIR, right? That's how I got into risk quantification to begin with. So FAIR is great, but it also has its limitations, right? Especially if you're trying to scale that, right? It serves its purpose. It has very good use cases for what it's designed to do. But then as soon as you are trying to scale that anywhere, that's where it gets a little bit of challenging, which is, again, there's things out there that are helping to hopefully do that. And then more often than not, people want to be able to say, well, how do I reduce my effort that I'm spending on risk quantification? That's where the machine learning or AI powered apps are coming into play, right? You're seeing more and more of that. And it's not this, people are like, oh, it's AI, you should be scared of it. No, there's various aspects of that you can leverage AI in a way that actually helps you manage your risks in a way that is beneficial.
So it feels like we are seeing these solutions trying to tackle each of these, the visibility issue, the effort issue, the data and analytics or analysis aspects of those challenges that we mentioned before.
Yeah, absolutely.
Cool. So yeah, take us through some of these key attributes that we identified, Tim, and kind of how they overlay to the to those kind of three broad buckets of approaches used to do CRQ.
Yeah, absolutely. So obviously, if you're in like, I want to build this by myself, a lot of the drivers of that is you may not be happy with what's out on the market, or you want to do some of your own like custom analytics from that perspective, or you feel like, hey, we can scale this better because we have a lot of really good data sources that we want to use, right? That's one thing. And then obviously from the FAIR-based solution, they're great and whatnot, but the challenges that you run into there is it gets a little challenging to use like your own data. And you may think like, oh yeah, I am using my own data. Well, a lot of it is still based on a lot of subjectivity, right? You may have a data point, but it all depends as far as how you're going about defining that. It allows you to, there's just a lot of effort that tends to be needed in which to do it from that perspective. But again, it does also support a wide range of use cases, right? So whether you want to use it for pure cyber scenarios or even leverage the platform for things, or leverages FAIR for like things more like operational risk, right? Gives you that flexibility. And then ultimately the machine learning or data driven approach, right, allows you to do a lot of that, right, in a very easy fashion, where you can actually map it to things like MITRE and being able to actually understand what those external threat actors might be doing within your environment, without you trying to guess like, hey, how could somebody do this, right? You usually have to ask that question. Hey, if I have this particular type of an attack, well, how does this actually happen in my own environment, right? Let's take that out and let's let them AI do that for you.
Cool. So yeah, so we have a product, Risk Quantifier. Can you take us through kind of we have the platform slide here. Can you take us through the key components of that?
Yeah. So yeah, absolutely. So when it comes to the RQ platform, again, you're here, you've expressed some sort of interest in risk quantification. So yeah, our platform, what we do is we come to the table with data, right? We have industry data from loss data. We have our own attack path model. We have our own attack modeling that has been done, right? Because if for those of you that are not familiar with ThreatConnect, we actually also have a threat intelligence platform on the side of the house, right? So that gives us that experience in that area to be able to say, hey, here's the types of attacks. And then we also have industry data from open source, like things like the Verizon DBIR report as an example, right? That's an open that anybody can get. We also have data that we pay for, right, to help augment from a loss perspective and from a threat perspective. And then we also have our own data science team that goes out and does their own research and then takes the data and puts it in a way that is defensible for your organization. And then the only thing we ask of you is to define the parameters, right? Is what type of organization you are, where are you at, and then what are the potential controls that you have in place. And then the platform is going to be able to do all of that, and we can tie this in with as much automation as you would like, whether you want to tie it into your GRC, your CMDB, where you're trying to get all the pieces of information that you would need to help define what those parameters are, to ultimately help you answer those questions of, well, which control improvement should we focus on? Or how much risk do I have for this particular line of business, as an example, right? There's a lot of different options that depending on what you're trying to answer.
Cool.
And then ultimately, as we when we go from as what I kind of touched on a little bit with the platform is we don't just stop and say, hey, we first, what we do is we tell you, hey, based on those parameters you put in, here's what your risks are. And then we take it in so that way you can actually take a look at your risk, whether it be for a particular line of business, maybe you're looking across multiple, or you're looking at a particular region, whatever it is, you're able to see what those are. And again, what it's doing is it's taking your information, mapping it down to the MITRE ATT&CK framework. So really focusing on those external actors and basically saying, here's the things that you should be worried about. Now, that's great, but also the challenge is, or the next logical question in there is, well, what do you do about it, right? So that's why the platform actually also provides automatic recommendations to say, here's what you can do to mitigate this risk, right? If you improve it by 1 level, if you improve it by 2 levels, 3 levels, 4 levels, whatever it is, from your controls perspective. And here's what it would actually do to your overall exposure. Here's how much risk from a dollars and cents perspective that this particular control improvement would actually have within your environment.
So effectively, someone provides input. Someone provides inputs, right?
Yep.
Someone provides inputs. RQ does the work.
Yep.
You get these outputs.
Yep.
Right. Okay.
Yep. And that's where, again, as we talked about those, we'll say those 3 different approaches from like, either do I build my own, do I use pure fair, do I use like machine learning, right? Everything you've seen right now is actually on the machine learning. But that's where we also recognize, hey, there's multiple, like there's different ways of answering a question depending on what question you're trying to answer. So that's actually where the platform comes into play. We kind of give you the ability to have your cake and really eat it too, because we actually support both the ability to do a fair analysis. We also have tried to automate the fair process for you. So it takes it a step further, allowing you to ingest your controls, but then we also to leverage the machine learning piece, right? So you actually get all of those different options within one platform that you can choose what modeling approach do you want to take based on the question you're trying to answer or for the group you're trying to answer it for.
So from an RQ perspective, we're not we're not locking you in, if I can summarize it that way, right?
Pretty much, yeah.
Okay, cool. So it definitely has that level of flexibility. Awesome. So cool. I guess I really liked the meme. Yeah, so that's pretty much it for the presentation. If you'd like to learn more about RQ and how it can fit into your organization, you can reach out directly to us. Like I said, we're available via LinkedIn. You can hit this link up to request a customized demo, or if you'd like to go take a tour. Right now, we actually have kind of an interactive demo available at /RQ-tour. So multiple ways if you'd like to learn more to get in touch with us. So with that, it is time for Q&A. So it looks like we have quite a few questions. So I'm just going to start from the top, Tim, and
Yeah.
go from that. So Maria asked, are there any shareable data sets to show cost which supports the cost of impact figures you quote? And the probability, sorry.
Yeah, so a lot of that is the industry data. So like example, for the cost perspective, there's a lot of well-known sources, but there's also a very large data set that is a paid data set, is something called Advisen, or I think it's like a Xywave company, just to be clear on that one, where a lot of organizations, a lot of CRQ vendors specifically leverage that data set to say, hey, look, here's what actual losses look like, or for organizations that have actually incurred events. And that's where being able to also show, hey, we've actually back tested this to show, hey, here's what the actual losses showed versus here's what the platform kind of calculated. Now, when it comes to probability, it's really the probability of what, right? If you're talking about a particular type of an attack, if you're talking about a ransomware attack, well, there's data like Verizon DBR is a good one, but also there's something called the Imperva Web Application Attack Report. And then even the Scientia, I think it's Scientia Institute or something along those lines, has information as far as what do attacks look like. And what's the probability of this occurring within your environment, or kind of gives you a very industry level perspective without it saying, hey, this is what your industry or your organization looks like. So hopefully that helps.
Cool. So Leon asked, what are the presenters' view on Hubbard's and Sierenson's book? So I'm assuming this is how to measure anything in cyber risk quantification?
Yeah, so it could be, is it the failure of risk management? Is it the or the how to measure anything, or how to measure anything in cyber risk management version 1 or version 2? So it depends on which one. I like Douglas Hubbard. I think he kind of laid the framework for just showing that, hey, you can actually quantify things. I really loved his example of being able to quantify the number of piano tuners in Chicago in like 1970s or something like that with very minimal information, right? So I think that was kind of the crux for like where FAIR kind of was coming into play. And then I'll go ahead and answer his next question. And I think I've already answered this, but like I said, I'm a fan of FAIR, right? FAIR is great. It has its use cases. It's a really good way of breaking down your risk into its various components of probable frequency and probable magnitude of future loss. But outside of that, it does get a little challenging. Right. So again, I'm a fan of it, but when you're trying to scale that, and I'm speaking from experience here, right? I've tried to build FAIR-based programs. It's just a lot of effort. And you have to do a lot of conversations with subject matter experts. And there's still, regardless of what you're getting a subject matter expert's estimate, there's still a lot of subjectivity in there.
So Chris asked kind of a question. Kind of assume that our view is that FAIR isn't the only option. So hopefully we answered that question, because we do think that there are other approaches than just FAIR. Again, so good approach, but there definitely are other tools in the toolbox. Jerry asked, do you think CISOs are scared to show how much cyber risk the organization they support? I think that's a great question.
Yeah, I think to some extent, yes. I've seen organizations. We've actually have one of our customers that it wasn't their CISO was afraid. They were actually saying, hey, look, here's what our risk is, but their legal department was like, hey, we're not going to show that, right? Because they feel like if they're showing that, then they're held liable for it. They're held responsible for it. Well, I think that's where some of like the regulations are coming into play, where they're kind of taking that fear out of the mix, right? They're saying you must do this, you have to do this, right? You have to show what's material within your organization, and really the only logical way to do that is to show dollars and cents perspective. So hopefully that helps.
Yeah. So another great question from Maria. Can we use the data from ThreatConnect to quantify an organization operates in a less risky fashion, so we can get better insurance coverage and for less dollars? So yeah, can it correlate payouts data and actuary data to the control domains in the environment? Yeah, it's a fantastic question.
Yeah, so we've actually gotten this question a lot, as far as will it actually reduce your premiums? I would like to say yes, but I think the jury's still out as far as if insurance companies are willing to do that, to show that. But a lot of the time what I've seen is if you can actually show like, hey, look, we have these things in place, it definitely gives you a larger, we'll say, negotiating tactic to be able to say, look, we're taking extra steps, right? We're actually understand what our risk is, and therefore we only want to insure against maybe our 80th percentile, right? Just a little plug for the platform. We actually have a section in the platform that allows you to do just that, and saying, hey, what is your risk from a high level perspective? And if we were to insure against whatever percentile we're looking at, how much risk is, or how much is that, right? And then to allow you to answer that question is it worth that extra spend? If they're telling me, hey, you need $100 million worth of insurance coverage, but your risk is only $50 million, well, why pay that extra money? So
Chris asked, is there an actual sweet spot that uses all the solutions? So I think hopefully we answered that. We believe RQ does address all those. Leon asked, what are the pros and cons of reporting a single number for CRQ, like estimated value, versus reporting a distribution? Good question.
Yeah, so that's a good question. As far as reporting a single number, right? If you're reporting a single number, what is that single number, right? Are you reporting the average? Are you reporting the most likely value? What is it? Now, it is good to show like what from an annualized value, right? So a lot of the time you'll hear this ALE, or annualized loss exposure or expectancy, right? If you're reporting on that, that's part of the story, because it does take into account the frequency. However, what I found is a lot of organizations tend to get confused by that, or the stakeholders are getting confused by that, because like, well, hey, we had an event and it actually cost us $10 million, and you told me our losses would be $1 million. Well, that's where I found it, from what I've seen more often than not, is it's better to actually report on multiple numbers, right? So what is it going to, how much is it going to cost you when it happens? And then overlay that into, okay, well, now let's take into account what this actually looks like in our environment, as well as how frequently this type of thing could happen. So cool.
Let's see. Jerry asked, I think you stated that AI could be used to calculate CRQ. Can these LLMs be shared with the business? So I guess it sounds like a kind of a question around kind of transparency. The models to the business.
Yeah, so within the platform itself, we're not a black box. I mean, we actually show, we have an entire section within the platform saying, how do we get to these numbers, right? So this allows you to be able to say, here business, here's the information that we have, here's the information that went into it, here's the data that we used, right, and where it came from. So we do give you that, which then would allow you to then share that with your lines of business, or whoever your stakeholders are.
Leon asked, are cyber insurers expecting CRQ, and are they using CRQ themselves?
I have seen, I've actually had quite a few conversations with a few different insurers. I think they are just starting to get into it. So I haven't seen them say this is an expectation yet. That could change, obviously, as additional regulation comes out from the various governments. But I have seen them start to use that, because the goal of what we said at the very beginning is the goal of risk quantification is really to enable better decisions, right? They're making decisions just like you are, but their decisions are, should we actually go into like, should we give you a policy in reference to this, right? And so I've actually seen some, we've actually been in conversations with a few insurers as well to say, hey, can you help use this? And also kind of put a bug in their ear as far as, can you use this to potentially reduce people's premiums that they're paying because of CRQ. It's not quite there yet, but I think it's on its way in the near future.
Cool. Spiros asked, how easy is it to find the required data within an organization, quality, volumes, et cetera, in order such a solution provides the ROI management seek?
Yeah, so what I found is it's actually much easier to find the data than you may realize. Some of it is a matter of what question are you answering, or what question, or how you ask the question, right? And it could be as far as, that's where I think a lot of the machine learning models come into play, right? We can, with some very high level information or decently high level, which is generally found within like a CMDB or asset management software like a CMDB, for those that are not familiar with that terminology, or a GRC, a governance, risk, and compliance, like ServiceNow, Archer, any of the GRC platforms that are out there, is usually has a lot of data. And then ultimately, relying on the last, like we'll say, place in which to find data, is generally just asking questions, going out to potential application owners saying, how much data do you have in there? And then when it comes to the return on that investment, return on that spend, that's actually a two-pronged approach. One is you have to understand, well, how is improving this particular control going to change my risk? And then secondarily, once you know that, like, well, what do we actually have to do to change our risk, right? What if we go from a level 2 to a level 3 from a NIST maturity perspective for asset management, as an example? What does it actually mean to do that? And then that allows you to then go and say, all right, company Y, here's what we need to do. How much is it going to cost us? Now, just to make that a little easier, we actually value a lot of our customers' feedback from that perspective. And one of our customers asked, like, hey, do you actually have any data as far as, well, what's the cost of improving a particular control? Right. So we're actually in the process right now of going through our data to see if we can actually come up to a statistically viable value for various control improvements from that perspective. So we're trying to make that easier for you. And ultimately, at the end of the day, our goal for risk quantification is to make it easier, faster, and better for you, right? And I firmly believe that being able to do that in an automated fashion, or do risk quantification in a mostly automated fashion, it is the route, because it also uses your data, right? So organizations tend to struggle to push back if they're saying, look, this is our data. So they can argue the data all they want, but then the results are what they are.
Yep. So Chris asked, is there any data maintained that actually shows estimated calculated loss, like fair versus actual losses?
I'm sorry, can you repeat that question?
Yeah, is there any data maintained that actually shows the estimated calculated loss, e.g. fair versus actual losses? So guess your estimated, calculating the estimated loss versus what the actual loss would be.
Oh yeah, so I consider that back testing. So yeah, within the platform, we actually do back test our model, and we actually have it exposed within the platform, so you can actually see, hey, here's what the platform showed as the losses. Here's what the actual losses were, and then we also have a section in the platform specifically. Taking it a step further is being able to say, well, what does this look like? How do I compare to my peers, right? So we actually have peer analytics in there built in. So that way you can say, hey, look, here's my organization. Here's what this looks like. What does other organizations that are similar to me in both either revenue or loss structure, what do their losses look like? And so where you can make that comparison, because I know organizations sometimes get that question as far as, well, what is my competitor doing?
Yeah, what's the rest of the industry doing? Yeah.
Yeah.
Cool. Casey asked, are you seeing solutions such as yours beginning to open the door for CISOs to have a more eye-opening conversation with their board of directors around cyber risk?
Oh yeah, 100%. Actually, yeah. I mean, I've seen if the CISO is not currently getting asked about what their risks are and what they're going to do about it, I'm seeing that happen more and more. Right. So if you're a CISO out there and you haven't gotten asked yet, you're very fortunate. But gone are the days of just saying, "Hey, I need $1 million to reduce our risk because." Because I need it, versus now you're saying, well, I actually need this because of X, Y, and Z. So yeah, I am seeing that happen more often.
Yeah, so we're going away from the gut feel of like how much budget I need. Yep. So, and apologies if I mispronounce it. EOS asked or made a statement. I think for the government agencies to do RQ from cost perspective, it's hard. I don't that. Sorry, I don't think that's how risk is measured in agency. So yeah, that's interesting insight there in terms of kind of enterprise versus government.
Yeah, so you actually brought up a very interesting topic, right? So, and that's where when you're talking about measuring risk for even nonprofits, let alone like public entities like the government, you're not talking about fines and judgments, right? You're not talking about the typical losses that a private organization might have. It's usually effect on your mission, right? Well, how's this affecting mission? So along those lines, because we've gotten a lot of those questions, we actually have a couple of different governmental agencies that we are working with to actually help them I'm going to say more closely build a better model, but it really just helped answer those questions as far as from a risk quantification perspective, what are the things that are actually of importance from a government perspective, and how do you express that leveraging the data? I mean, government agencies have data as well. It's just when it comes from a losses perspective, that's where it changes the conversation a little bit. So stay tuned on that one. We're working on that one actively right now because of the importance of what we have found, at least within the federal space.
Cool. Last call for questions. Okay, well, thanks everyone for attending. Really appreciate the fantastic Q&A session there. If you do have any follow-up questions, like I said, know to reach out to us. We're happy to respond. And again, thanks for your time. We will be sharing the slides for this afterwards, so be on the lookout for that.
Awesome. Thanks, everyone.
Thanks all. Appreciate your attendance.